Omicron Bitcoin ETF provides investors with a regulated pathway into the cryptocurrency market.
When you're ready to take your investments to the next level, you might want to consider Monaco.
Hello, this is the Global View on Wednesday. I'm Andrew Gagan. Thanks for joining us here at AusBiz. Let's take a look at what happened overnight. Global equities pairing their recent gains despite there being little news to trade on, while the US dollar continued to weaken ahead of the release of the Fed's July policy meeting minutes and Chair Jerome Powell's speech at Jackson Hole later this week. The recent rally on Wall Street came to an end with all three of the majors there slipping into the red, as well as the small caps. Among the 11 major sectors in the S&P 500, energy was the worst performer, losing more than 2.5% as the price of oil continued to fall. Nvidia fell, with investors awaiting its earnings results next week. Shares of Bank of America slipped after Berkshire Hathaway cut its stake in the company. Eli Lilly shares jumped after its weight loss drug Zepbound was shown to drastically cut the risk of developing type 2 diabetes in pre-diabetic adults. Cybersecurity firm Palo Alto, its shares surged after its fiscal 25 revenue and profit forecast beat estimates. Boeing fell in the wake of the US Federal Aviation Administration's announcement that it was adopting an airworthiness directive for the aircraft maker's 787 Dreamliner. And Alaska Airlines and Hawaiian Airlines on the move as the $1.9 billion merger of the two companies cleared regulatory hurdles. And US listed shares of BHP and Rio were lower. Well, US Treasury yields have continued falling as the prospect of an interest rate cut next month loomed large ahead of the Federal Reserve Chair Jerome Powell's remarks at the end of this week. The Fed funds futures market now fully pricing an easing by the Fed at the September meeting with a 71% chance of a 25 basis point cut. Traders have now priced in close to 100 basis points of cuts by the end of the year. And the yield on the US 10-year note slid to 3.81% and is on track for its biggest monthly decline since December, the 2-year falling back below 4%. Meanwhile, Canada's July inflation reading rose an unexpected 0.4%, or I should say it was expected, 0.4% higher for the month to be at 2.5% year on year. And the Eurozone's CPI data was unchanged from preliminary readings, coming in at 0.2% for the month, while the core annual figure was at 2.9%. And the US dollar has fallen to its lowest level since January, as investors await revisions to US payrolls data, the Aussie trading at 67.5 US cents. Let's get across what is moving markets, particularly with a focus on the States. John Blake joining us from Zacks Investment Research. John, welcome back. Great to see you again. So, markets very much awaiting what we're going to hear from Jerome Powell at the end of this week at Jackson Hole. What do you think he will say?
Andrew, he's not going to give us a firm hand on the rate cutting in September for sure. Number one, he's not going to tell us 25 or 50. He's not going to enumerate. What he is going to get into is how he is going to balance the risk between his two parts of his statutory mandate. One is the inflation rate, which is coming down, and he'll talk to that about the shelter costs, the usual stuff. But he's going to start to emphasize slowing labor markets and rising household unemployment rates and how the Fed's monetary policy will affect that. The symposium meeting is about the effects and effectiveness of monetary policy transmission. So that's basically telling you what he's going to tell you about is how he thinks the rate cutting or the lack thereof or the speed of rate cutting over the next 12 months, 16 months is going to play out for those two mandates. That's what I would be prepared for. And I think it will be kind of disappointing for a lot of people because he's not going to tell you what he's going to do in September.
Yeah, all right. A lot of anticipation that he may well give something away there, but as you say, more likely he will not ahead of next month's meeting. John, what data is of importance then ahead of that Fed meeting next month that could well determine whether they go 25 or 50?
Yeah, obviously the key one will be the non-farm payroll for August, which will come out in early September before the meeting, and the revisions to the July and June numbers as well. So, typically what I like to do, Andrew, is look at the two backward revisions and the current unrevised number and add, average them out. And we were at 170,000 a month over the last 3 months heading into this month of August. So 150,000 on payrolls is basically our labor force growth up here. So we were not in a recession, even with that 113 print last month, but it's setting a tone for this August month where A, we want to see if there was a hurricane effect on the July numbers, and B, is there really evidence that we're getting up into a 160, 170, 180 number for August? That would calm things down a lot, and it would probably open the door for Jerome Powell to cut less. If he gets a 70 or 80 print out of August, so we go below 113, then you're going to see that 50 basis point cut, radically move up in terms of its probabilities in the next, week or two before that Fed meeting.
John, elsewhere, geopolitics continue to play its part with the global markets, at least, not the least being what is going on with oil, with the prospect perhaps that we will see some peace negotiation brokered between Israel and Hamas. That's obviously eases tensions just as far as supply concerns out of the Middle East concerned. Although, on top of that, I guess we've also got weaker demand out of China at the same time. What are you seeing in the oil market?
Andrew, I saw a really interesting chart, and it was the 10-year yield and the West Texas Intermediate oil price moving almost in tandem. So now we've got a very low 10-year rate kind of telegraphing us that the 10-year, the WTI oil price is going to stay down too. So the interesting thing here is when the 10-year treasury kind of forecasts a recession coming, oil prices fall along with it. So, you got to decide whether the smart money is smart this time around or it's been dumb like it's been dumb for 2 years and not forecasting recession. But I think the key tell here is to realize the WTI oil price and the 10-year treasury rate are walking hand in hand, and they're both trying to forecast, economic growth on a global level.
And just briefly, what are you seeing with the US dollar? Because that has continued to weaken, as I pointed out there. Now it's its lowest level since January.
Yeah, I mean, look, this is the story of the Fed rate cutting, and it's, Andrew, we were a little ahead of this, you and I, last month talking about the distance between the Fed's lack of cutting and the distance between these different policy rates around the world. And then we get the Japan carry trade, which kind of emphasized that. So this is the issue with the dollar is it's really the gap between our policy rates and our peer countries like Japan, like Australia, like the UK. You've got the European Union, these types of rates, it's the gap between the rates that concerns things. So right now, people are still thinking that the Fed is going to be slower in cutting than these other groups because it's cutting later. So that's what's really putting the bid on the dollar, making it weaken, is people are saying, look, I'm just going to try to price this correctly. And I frankly don't think anybody's got this right. I mean, again, the problem here I have with any dollar movement, which is basically a policy rate movement in the United States that's trying to be forecasted, is I don't think anybody really has a good sense for how the recession scenario will play out. One thing I looked at today, Andrew, is expansions, not recessions. And the average expansion in the United States is 64 months from a recession. So we had a recession in 2020 in March, 2 months long. That's basically 5.5 years. So the average expansion should be the end of 2025. And this market is pricing 10, 25 basis point cuts by the end of 25. So who's right about this? I think there's just been a really basic fatal flaw in the macroeconomic forecasting in the United States. It's not about recession. It's about the average length of expansion after a turndown. And coming out of a COVID pandemic, I can argue it's going to be a little bit longer. But on average, we should look at being worried literally a year from now, not right now.
That's a really good point to make there, John. Now, of course, we always get a bonus when we speak to you. You bring 3 stocks to us. Let's go there just briefly, see what you're seeing. The first one being Paramount Global. Why are you focused on what is that media conglomerate, of course? What are you seeing there?
Yeah, Paramount Global. This stock, it has, if you look online, this is PRAA. This is their A shares. You can also PRA, which is not the A shares, the non-voting shares. So you got 2 tracks of stocks. You've got multiple bids for this company. which is 110 years old. It really goes back to the very early days of Hollywood and television. And so they're based in Times Square. So they got a big Los Angeles operation. And the fight really is about how to get their streaming business to move. So why is the stock moving up lately? They fired a lot of people in a kind of a restructuring to improve profitability, and that did raise estimates. So the short answer to why we're interested in the stock and why it's the number one rank is those firing of those people and taking out the costs. But the bigger play is that you've got all the Skydance group that has an existing accepted bid, but it doesn't play out till September 2025. And then on Monday, we got the Bronfman group, a consortium of groups that have put a competing bid in. So we're going to hear more and more about Paramount, and you just got to remember a couple things. One is, nobody really knows whether they're going to be the ultimate bidder or whether Apple or Netflix or Amazon will step in. They're just kind of hiding out in the shadows. So it's a very interesting space. You had the Olympics with the NBC's Peacock app did extremely well. So the big news here is streaming is really taking out cable. It has annihilated cable. So Paramount is just kind of this dinosaur, and everybody's wondering, is such a big franchise, who picks it up? That's really what's interesting here.
Yeah, well, it's happening across the globe with media industry being upended at this point. John, just a quick look. Tenet Healthcare, it's a healthcare services company. What are you seeing there?
Yeah, Andrew, look at this stock. I mean, it always beats, those green arrows going back for years and years and years. So you ask yourself, how on earth did a hospital stock, they own hospitals and what are called ambulatory care facilities, which are basically outpatient facilities. So how on earth did this thing move from $60 to $150 in a year? And the answer is people are doing a lot of procedures. They're going to the hospital a lot. And they surprised themselves. They were even surprised themselves that this was happening. I have to wonder if it's something underlying the situation out here, whether it's the obesity situation in the United States, whether it's people finally going to the hospital after COVID, whether it's COVID, some long COVID effects. I have no idea here. But what's fascinating is, you got a very defensive play here that basically doubled its money in 12 months. And that's extraordinary, Andrew. So I just think we want to put it on the table here that sometimes good stocks come out of places you don't know. Yeah,
indeed. Well, that price moving over since the beginning of the year. Just very quickly then, C.H. Robinson Worldwide. So this is what, in logistics?
Yeah, so this is a very old trucking company based up in Minneapolis. But look at the estimate revisions coming out of COVID. So what happened here, of course, we had a supply shock. But what the transportation experts have told me is that when we tried to deal with the demand that was so strong to bring the goods into the ports, the trucks got the pipelines of trucking, units, truckers, trucking companies, just the sheer volume expanded. And then they went into a price collapse because they kind of went into a price war. So it's been, as you can see with those long declining estimate revisions for a year and a half out of COVID, the trucking was kind of dead. And that's actually not the case in the last 2 weeks. They bounced up. So the real issue here is if trucking is telling us something also interesting is that there's finally a floor put in on the transportation market. This is now a strong industry, not a weak one. And pricing is now being, they're being able to get some prices for the trucks deliveries. So really interesting turnaround here in the trucking business that, also kind of shows that, really the bounce out of the COVID period, the post-COVID period is basically over for trucking.
John, always really informative to speak to you. Thanks so much for joining us from Zacks Investment Research.
You bet, Andrew.
Quick check of where we're likely to open, and it is a negative start ahead of us there. As you can see, SPY futures off by more than 0.5%. Stay with us because the open is just around the corner.